Hi friends, Simit here. Excuse me. Simit here from InformedTrades.com. Today is June 10th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on the markets, all as a part of helping traders learn. You can learn from my successes, learn from my mistakes. We can all learn together. I employ a method of trading known as price action swing trading to the Forex market. If any of the terms I'm using are unfamiliar to you, check out InformedTrades.com. Register as a member. We have a huge archive of learning material covering not only my personal method of trading, but many other styles of trading, many other markets. Check it out. Share your knowledge. Set up a practice account. Ask questions. Share your trades. We can all learn together. Let's take a look at the charts. Okay, right now on the chart, on the screen right now is a chart of gold, which I like to start with daily, as I have a considerable portion of my net wealth, at least relative to for me, in gold for the long term. Personally, I'm interested in buying between 1180 and 1280. I'm very bullish on gold. Actually, I probably would even be willing to buy a little higher than 1280, but for the time being, personally, I'm interested in buying between 1180 and 1280. We did see price stall a bit over the past couple days, so there was that big down move. Now it looks like it could be getting ready to rally. Personally, I still think price could fall to 1180. If it falls below 1180, like I mentioned, I'd be a little concerned. But if it falls to 1180, I think that'd be a great buying opportunity. Right now, though, it looks like we're still in the trading range here. Let's see if price breaks up out of this range or down. It's a little unclear which way it'll go yet. I think the trend is still bearish. Oh, as we're watching, we just saw a noticeable break out that way. So there could be a breakout here. If we close above this triangle today, or excuse me, this rectangle today, that might pave the way for a retest of 1280, which is a major support level. That's gold. Now let's look at the existing Forex trades I have on the market. One is, well, actually, before we take a look at the Australian dollar, let's take a look at pound Aussie. And actually, this one is closed out. Pound Aussie. Now this trade, I went out. I had an order to go long. It got stopped out. So that and I posted a couple days ago that there were signs that the Australian dollar was reversing. Turns out that's false. So this order hit my stop. I lost money on that one. Of course, I always try to keep my risk in check, so it's just part of the business. In terms of what I did wrong on this trade or anything I would do differently, I guess the one red flag is that I do have two long positions in the Australian dollar. I'm long Aussie US dollar and long Aussie yen, and then I went short the Australian dollar against the British pound by going long this pair. So I thought it made sense at the time, and I still kind of think it does. So, but it's something to think more about in terms of future trading. Definitely something I'll be revisiting and thinking a little more about whether that was the right decision. So that was the Australian dollar. My stop got hit on that one. Okay, now that was pound Aussie. Now I still have a few other Aussie positions on. Aussie US dollar, I entered at this level. My target profit's up here, so far so good on this. This trade is also, you see the dashed orange line here. Trade has moved to break even. So that trade has been de-risked. I mean, if price comes all the way down back here, it'll hit my stop, and I won't lose any money. Here is Aussie yen. Now this also looks like, this to me looks like, first of all, we're close to a resistance level. One could argue that a resistance level is right here. So we're still in this vicinity, right? One could argue, it's in this range, that this range here is a resistance level or a supply zone, excuse me. And that may very well be the case, and I'll be looking for candlesticks, and if we start to see more signs of candlestick reversal in this price range between 96.65 and 96.20, I'll probably close out my position, especially if we break below this level here. But until then, I'll still hold on. Let's see if we can reach 96.20 and get a little more profit room out of that. But definitely I'm keeping an eye out for this. That's the Australian dollar or Aussie yen. This trade has also been de-risked, meaning I've moved my stop to where I entered here. So if price comes all the way back down, I'll close it out before then. But if price were to come all the way back down and hit this level, I wouldn't lose any money. I wouldn't gain any money, but I wouldn't lose any money. The trade has been de-risked in that regard. Okay, pound US dollar. This trade has not been, oh yes it has, I take it back. This trade has also been de-risked, so this stop has moved up to here where I entered. Whenever you see an orange line or resistance level, that's denotes a level that when it clears that level, I will move my stop to break even. So we did clear that level on June 5th. Price is coming back down here, so this trade is not looking too good. I thought about taking it off, but it's too small of a gain. I'd rather just de-risk the trade, and let's see, maybe it'll maybe it'll take its time and run into this trend line, find support over here or something, and head back up. We'll see. So that's not looking too good, but at least the trade has been de-risked, so that's reassuring. Dollar Canada. Okay. This trade is so far so good on that. I shorted at this level, based on we had a Fibonacci retracement, and the moving averages aren't showing up on this chart, but there's also a moving average here and a support level going back to here, or resistance level, excuse me. Well, support turned resistance, but you can see this is a level that price responded to back in February, and a little bit here as well in April. So all these factors, I thought it'd be a good time to short. The trend is clearly down based on the moving averages, which aren't showing up. There's often few issues with the trading view in the early U.S. morning hours. It's about 8:30 New York time in the U.S., 8:40. Probably a lot of users and the charts tend to clog up a little bit. I love these charts, but there is that annoyance at times. Okay, so this is heading down. And so far so good on that, or it looks like the main thing is that the highs here aren't breached. I really don't want to see the highs, on June 5th highs breached. That should be a bearish checkmate, and that will signal that the trend is, market's ready to head back down. That the bears are the bulls are a little exhausted. The bears really use this opportunity to enter and short. So that's dollar Canada. The trade has not been de-risked, so if price were to rally and hit my stop, I will lose money. Now, one order that I revised today is Kiwi yen. I had an order, initially it was set to short at like 87.32, right here, right, where you see the fingers. Actually, I'll just draw the line. It was set to basically right at that red line. I had an order to go short there. I moved it up to this black line here. And the reason for that is you see the candlesticks are really getting narrower here. To me, this looks like a really nice reversal setup. And I was seeing a lot of reversal signs on the yen. Even if we look at Aussie yen, right, we have a hanging man pattern. And if you look at the yen on other pairs, it's already started declining. So I thought, Kiwi yen looks like the yen may be ready for a rally. And I thought this pattern, it was still really nice candlestick pattern here at a major level. This level established here in March 20th, also established here January 8th of this year. So I thought there were a lot of opportunities to short. Put a stop at 87.95 and target profit 84.90. So that gives me a reward risk of, I think, a little greater than 3 to 1, 3.5 to 1 or so. This stop, definitely, I might be able to move the stop a little closer too. I might be able to move it down to 87.67 or so, for instance. Yeah, in fact, I think I might do that. So I might adjust this trade. I probably will adjust this trade. I'm not sure what I'm thinking. Sometimes, actually, that's one of the things I enjoy about these videos. As I'm talking it out, sometimes it reveals things to me that I wouldn't have otherwise seen. So I'll be revising the stop loss on this. I'll have the trade posted on my blog on InformedTrades as well. But here's the basic idea. You can see the order. I think it's already been filled, actually. I went long at 87.10. Excuse me. And if I can move my stop a little closer, perhaps 87.60 or so, that might let me move my target profit a little higher. If I can get my target profit up around here, that might be a little interesting too. We'll see. That's about it for the trades I have on at the moment. Oh, and also one thing I want to add is the level to move to break even is right here. We'll make that orange. We'll make it thin. We'll make it dashed. There we go. Okay, so if price once price closes below, if price goes in my favor and falls below 86.30, then I'll move my stop up here to break even. And that level is determined because there's a support level. One, we see major support level here, support level here. So if price can clear that, that will show that the momentum's in my favor and a little bit of a floor has been established. Once it clears a little, it'll be tougher to go back up. That's about it for the trades I have on at the moment. Of course, if you have any questions, join us at InformedTrades. I'll also have my modified version of this Kiwi Yen trade posted on my blog on InformedTrades. Best of luck in your trading, and we'll see you tomorrow. Take care.